What if I told you banking regulations don't just affect banks? They affect your fees, your loans, your credit access, and even your job. Today we're breaking down how the latest banking regulations impact you, whether you work in banking or just use it. In our last video, we covered what's changing in banking regulations for 2025. CFPB enforcement shifts, debit card fee discussions, Basel III capital rules, and deregulation trends. Now let's talk real-life impact. Let's start with consumers. Regulation changes influence account fees, overdraft policies, loan approvals, credit availability. Even small rule adjustments can change how banks price products. When capital rules tighten, banks lend less. When rules loosen, lending expands. That directly impacts mortgage approvals, auto loans, personal credit lines. Banking regulations control the flow of money. Interchange fees help fund fraud protection in account services. If caps change, banks may adjust rewards programs, change account pricing, modify fee structures. Nothing exists in isolation. With CFPB enforcement becoming more targeted, institutions must document intent more carefully. For consumers, this means protections still exist, but enforcement looks different. Understanding your rights matters more than ever. Now let's talk bankers. Compliance isn't going away, it's shifting. Policies, procedures, audits, and training must adapt to new expectations. Tellers and bankers feel regulation changes first. New disclosures, updated scripts, different documentation. Every regulatory update changes daily workflows. Behind the scenes, risk and operations teams are adjusting, monitoring systems, reporting tools, internal controls. Even small rule changes require months of preparation. Smaller institutions face unique pressure. They serve local communities but have limited compliance resources. That's why many regulation changes focus on easing burden for community banks and credit unions. Basel III affects how much capital banks must hold. More capital means safety, but it also means less lending. This balancing act impacts economic growth. Here's the real issue. Most people don't understand banking regulations. They only see results, higher fees, denied loans, policy changes. Financial literacy bridges that gap. Financial literacy helps consumers ask better questions, compare products, understand disclosures, protect themselves. Knowledge is leverage. Whether you're a banker or consumer, stay informed. Read disclosures, ask questions, understand your accounts. Regulations change, awareness keeps you ahead. If this helped you understand how banking regulations affect real life, like the video. Subscribe for weekly banking education. And comment what topic you want next. Banking regulations shape everything behind the scenes. But financial literacy puts the power back in your hands. Learn money, so money doesn't control you. This content is for educational purposes only and is not financial, legal, or investment advice. Please consult a qualified professional before making any financial decisions.